Hey, this is Trader Travis and welcome to another video in our free training series. If you want to make sure you go through the complete free web-based course, just go to our website, learnstockoptionstrading.com. You know, I'm biased because I created it, but I feel it's one of the best free web-based courses on the web because it's extremely simplified and it's step-by-step and it'll take you through the complete entire process of option trading from start to finish. Now, in this particular training video, what we're going to do is teach you about an out-of-the-money option. And you'll also learn the danger of choosing out-of-the-money options. You know, and there are some benefits or some pros, but it's usually the cons of trading out-of-the-money options that really get people in trouble. So I'll spend more time talking about that than I will the benefits. And so what I'm going to do is pull up my option chain real quick on my broker's trading platform. And, you know, if you're new to option trading and you really don't have a broker's account where you can trade options, you know, all this may look like Greek. It may look like, you know, a airline control panel, like if you're flying an airplane. And so I won't spend too much time kind of deciphering or explaining, you know, everything on this option chain. So what I'll do is I'll have to direct you right back to our website because we have an actual training module on our website that covers that. And here's the URL here. It's just learnstockoptionstrading.com/stock option chain. And that's just a free tutorial that I actually go through and explain the option chain and kind of explain what all this Greek and this weird stuff looks like. And so in this video, we're going to talk about the buying side of options. There are two different camps or two different styles of option trading. You have option selling, you have option buying. So this example I'm about to show you is particular to option buying. Option selling, we really won't cover here. It's just not enough time in this videos, but we do cover that fully in our option profit formula coaching program. And so out of the money options, let's show you what an out of the money option is. Let's define it. An out of the money option is an option that is, well, it's two sides here. Let me back up here. Okay, we have call options, we have pull options. Okay, and so call options, by their basic definition, they're legal contracts per se. They give you the right to buy something. In this case, we trade stock options, so they give you the right to buy a stock. Put options give you the right to sell. You know, and this is if you're buying options, all right? So for a call option, the out-of-the-money option would be the contract where the strike price is higher than the current price of the stock. All right, so let's look at the strikes. The strikes are here, these little, you know, numbers right here, and I'll explain what they are. And so this is the call option side, this left side. So this option right here, you know, and the broker makes it easy because it's not shaded, but this option is out of the money. And let me explain. The strike price is the price, or the exercise price. It's also called the exercise price. And so for a call option, this is essentially saying you get to buy Google for $745 because we're, you know, showing the Google option chain. All right, and so the way you think about this is, you know, why would somebody, you know, buy a contract and then want to buy Google for $745 when Google is actually trading right now at about $733? So it's trading for cheaper on the actual open market, the stock market, than it is this contract. And so you can just go in the open market in the stock market and just buy it for $733. You know, it wouldn't make any sense to really buy this contract that gives you the right to buy it for $745 and then exercise it because you would be at immediate loss. You would buy it at $745 and the stock is trading at $733. So you would be at a loss. You would be out of money. So that's one easy way to think of out of the money options. And so for put options, it's a little bit different. Put options takes a little brain shift. You essentially have to think opposite. For put options is when the strike price is lower than the current price of the stock. Because if you recall what I just said, put options give you the right to sell something. So you would buy this put option here, gives you the right to sell Google for $715. All right. So again, Google is trading for $733. If you own some shares of Google, you could just sell them for $733. You know, instead of buying a contract, exercising your right, and then selling it for like $15 less than what you could, you know, get for it in the open market. So it makes no sense. You know, you would essentially be losing money. That's why they call them out of the money options. So here's one of the benefits still of out of the money options. All right. So right here, I'm looking at a think back function on my broker platform. Let's you go back in the past. And this is good if you want to test out theories and strategies people. Well, if you heard that ding here, I'm recording this during live market hours, and so that was just letting me know that the market is closed. But anyway, You know, this think back function is good if you want to test out strategies that people are teaching you, and you can go back to see if it really worked in the past. So let's look at buying. Again, we're only talking about buying. So let's say we bought this call option here, the September 745 call option is out of the money. So now let's fast forward a few days. I knew Google went up in price. I'm actually in a trade right now on Google. So let's say Google went up in price. We bought the September 745 call, and here it is right now. It's now in the money. So now let's go ahead and sell. So we bought here, we sold here. Google went up in price. Look how much money we made, $745. All right. So now let's take our calculator out here. So we bought it for $230. If you understand option pricing, you always have to multiply it by 100. Just to get the actual price you pay. So we paid $230, but we made a profit of $745. So $745 minus $230 equals a $500 profit. Okay, we back out, or we divide it by our initial cost, not back out, but we divide it by our initial cost. You can just see in just those 3-4 days, 224% return on investment. Yes, it's going to seem unreal. Yes, it's going to be like, no way, but it is way. That's just how it works. I've been trading options for 9+ years. Doesn't mean you're always going to get those 100% plus baggers, but it is possible. Don't let anybody tell you otherwise. The only way to find out if this is true is get your butt in a class, learn it, implement it, and stop listening to the naysayers. Okay, that's my rant there because I get tired of the naysayers. But anyway, so that's the benefit of out of the money options. You get such an explosive movement. You get a high percent return on investment in a short matter of time. We won't go into all the reasons why because it would take an entire lesson on the Greeks. That's the benefit. Here are the cons. If you buy an out of the money option, you absolutely need the stock to move. In this case, if we bought this September, a few days ago, we bought the September 745. If Google did not move in price upward, if it went down in price or just stayed still, man, you would lose your money in like a day. I mean, you would see the value of this option dwindle down in a heartbeat. It would dwindle down so fast, you probably wouldn't have time to correct it or catch it enough time to recoup some of your money. Now, that's the danger. You know, people are buying these out of the money options. They're essentially gambling. They're hoping. There's no hope. That word should be completely removed from your vocabulary. Hope. There's no hope in trading. At least there's no hope in successful trading. And so that's the danger. You get all these people hearing about options. You can hear about leverage and making 100% return on investment. And they go out and they buy these really cheap out of the money options. And then they wonder why they're losing all their money. It's because they don't know what they're doing. Okay, you need a roadmap, you need a blueprint, you need somebody to help you, avoid all these pitfalls that us more experienced traders have already gone through. I've already done all this stupid stuff. And so now I found the best strike to pick, at least for beginner traders, until you gain more knowledge. So that's just a short lesson on out of the money options. I wanted to show you some of the pros. Is yes, you can make a lot of money, but the con is you can actually lose it. And I wanted to explain what an out of the money option is. It's essentially you're out of money. You're going to lose money. All right. So that's it, folks. That's it for this video. If you want more training videos, you want to keep notified, just get on our notification list. And so you can do that by subscribing to our YouTube channel or clicking on the link below to take you to our website. You take care, and I'll talk to you soon. Bye.